Okay, it's Tuesday the 15th of November and we are on the Ftse 100. As always with the live trades, if you want to see the analysis of this market this morning before the market opens, just look at just watch the review video of the same date. Okay, so this market pushed off of the zone below this morning. It came all the way up into the pre-identified zone between 6800 and 6818. The market has shown no real sign of slowing down. Then we had a large spike up right here. The market has then rolled over and it has drifted down relatively slowly. My entry candle was 950. The trade actually got triggered at 9:55. However, I just held off on entering that trade because Euro GDP news was coming out at 10. So I wanted the 10 a.m. candle to, give the first sort of 15, 20, 30 seconds just to make sure we weren't going to see the market rocket up, some wild swing, which you can see on the back of high impact news releases. You always want to be careful around news. Okay, so this was my entry. Now, what am I looking at? Well, I have a management point I want to watch. I'm just going to mark it in. You can see the market here, pushed up into the zone, rejected. When it breaks up here. And it then does what? It returns back down, tests this level, and then this is where we see the very bullish bounce. So where is my management point? It's at that exact level, so right here. Basically where the market is just coming into now. I want to just be a little bit careful as the market comes down there. I want to watch for strong bullish reactions. Target down at this level right here, 6792. This line right here represents my stop. So if we can meet target, it's around about a 1-to-1 risk reward on the trade. So all I'm going to do now is watch the trade, manage the trade. I will pause the video and likely cut it down. What I will do is just turn it back on when I am managing the trade, or when there is anything to talk through, re what the market is doing. Okay, so the market has came down into this management point, and what we have seen is we have had the bullish bounce, and now I'm just basically watching this candle to see how it's going to close. If it closes overly bullish, it's a negative sign for the trade. I may look to get out of the trade early. Currently, it's not overly bullish, and I'm more than happy to stay in the trade. I was expecting the reaction here, which we got at 10:05. The 10:05 reaction was not overly bullish. 10 a.m. candle, it was a strong bearish candle. 10:05 candle, not quite as large. And then it's the 10:10 candle that I am interested in. You've seen the initial reaction, but it's then how the traders follow up after that initial reaction. Okay, so yep, it has closed. It's pushed up. It's shown rejection. So for me, I'm more than happy to remain in the trade. Still looking at the exact same things, with the target being down here. If the market does come back down here now and shows a reaction once again, and that would be the second reaction whilst in the trade, I would likely just exit the trade. Okay, so the market has just shot up. It's actually came to 20.5, so basically half a point from my stop. If it pops up now to 21, I will exit this trade for a loss. The market came down. It showed the bounce off of the level as expected. We then got a pin bar, a candle of indecision, which for me meant hold the trade. And it has then, right after at 10:20, shot up. So I'm just watching now to see what the market does. If it does pop up to that 21 level, I will exit the trade for a loss. Okay, so the market has returned back down to the management point. As we went over, the stop is at 821. We got up to 820.5, and then we made a second run at it and got up to 820.3. So we came very, very close to the stop. However, the market has then paused and it has reversed. So now that we're back down at the management point, I'm just doing the exact same thing again, watching to see how the market reacts, looking for the target to be down towards 6792. When the market comes up like this, with the management I was doing, basically after this candle here, it just didn't close bullish enough for me to get out of the trade. The next two candles, one showed rejection, one was a doji candle, which is indecision, and then we shot up. When we shot up like this, we're so close to the stop that I was happy to let the trade run. We didn't quite get to the stop, and the market has came back down once again. This is why it's always a good idea to have a solid trading plan. And not only a solid trading plan, but a checklist for, first of all, for entering your trades, but a checklist for when you're in your trade. So before you enter the trade, you should know where your target's going to be, or where your management point's going to be. You should know what is your reasoning for exiting the trade, or are you just going to let the trade reach your stop? You should know what part of the market you're watching for potential reversals. So I was watching the level as mentioned right here. I will be watching it once again now. If you have checklists and plans already in place, it makes trading a lot simpler because you're no longer making incorrect decisions. You have the step-by-step process sitting next to you that you're following. You know, it's your trading plan. But some people, when they hear trading plan, they do the bare minimum. It's basically the same thing that most people do with everything in life. They do the bare minimum. So when they have to design a trading plan, their trading plan is something like, look for pin bars at a reversal area, enter below the low of the candle if it's resistance, enter above the high if it's support, and that's it. You need to go into a lot more depth. You've got to remember this, trading has a very, very high failure rate. So how do we combat that failure rate? Well, we work out ways to give ourselves the highest chance possible of succeeding. And we do that by figuring out where everyone else fails, what it is they do that causes them to fail, and then we figure out ways to stop us from doing that. Because at the end of the day, there's no difference between someone who fails at trading and someone who succeeds at trading, other than one of those people is following a solid trading plan. That's the only difference, guys. It's all you need to learn, all you need to do to become a successful trader. Have a successful trading plan, one that works, and then just work at your craft until you can follow it to the letter. Okay, so coming down into 6792 now, as mentioned, this will be the exit point. Around about 14 points. 14.6 will be 6792. So, around about 14 points, I'd be happy to exit this trade. That will be a 1-to-1. Okay, so around about 13.5 or 14 points, depending on where that trade closed. I will need to double check. But 1-to-1 risk reward, we came so close to being stopped out. The key thing was, follow the trading plan. and the trade worked out very, very nicely. Okay, so if you do want to see the analysis from this morning for the trade, pop over to the review video. It's available at the Decisive Trading YouTube channel. There's actually a section of Zone Trader review videos. Okay, I hope that was helpful, guys. As always, I'm James Orr, and thank you.